All right, picture this for a second. You are walking into your absolute favorite electronics store. You've been eyeing this brand new device for months, right? But there's a catch. You do not have the cash on hand to actually buy it today. So you're wandering the aisles and boom, you find it, the perfect laptop. You check the price tag and it reads exactly $1,000. Now, if you were to open up your banking app right at that exact moment, your account balance is completely empty. You've got literally $0 to your name in liquid cash. And yet, you just pull out your wallet, swipe a tiny piece of plastic, and a few seconds later, the receipt prints. You walk right out the front door with a brand new $1,000 laptop. We have to stop and ask, how is that even possible? Is this whole system just banking on blind trust? Or is there a much more complex, calculated mechanism at play behind that simple swipe? To really get under the hood and uncover the hidden mechanics of credit cards, we're going to follow the journey of two friends who just landed their first jobs, Daniel and Ava. Through their story, we're going to see firsthand that a credit card, despite how incredibly magical it might feel in the moment, is absolutely not free money. It's borrowed money, and it is bound by a very strict set of rules.
So one afternoon, Daniel practically runs up to his friend Ava, proudly flashing this shiny, brand new credit card. He tells her, "Look, the bank approved me." Ava, who's a bit more cautious, asks him a pretty simple question. "Okay, so how much money is actually in your account?" Daniel just laughs with total overconfidence and goes, "None. That's exactly why I got the card." Ava immediately realizes she needs to step in here because Daniel has fallen for the classic psychological trap of viewing a credit line as personal income rather than what it really is, a liability.
And Ava's response brilliantly illustrates the foundational concept of credit. She tells Daniel to think about the public library. When you walk into a library and pick up a book, you don't own it, right? You're simply borrowing it for a short period of time, and you have an absolute obligation to return it. Well, a credit card works the exact same way. When you swipe for a purchase, you're just temporarily borrowing money from the card issuer to pay the merchant. You don't own that money, and you must eventually return it.
Which brings us right back to Daniel's laptop purchase. After he buys it, the store gets paid by the card network and Daniel goes home happy. But at the end of the billing cycle, reality hits. He gets a statement in the mail and it clearly shows a balance of exactly $1,000. He owes every single penny of what he just spent. But here's the secret to avoiding a massive financial trap. It's something called the grace period. Ava points this out to him. She explains that if he plays by the rules and pays that full $1,000 statement balance by the due date, many credit cards won't charge him a single cent of interest on that purchase. During this grace period, he's essentially borrowed the bank's money for a few weeks without paying anything extra for the privilege. Another way to look at it is kind of like taking a taxi ride across town. You don't hand the driver money while the car is moving. You pay when you safely reach your destination. The taxi ride wasn't a free trip, and using a credit card isn't free shopping. Both scenarios just give you the flexibility to delay your payment until a later, agreed-upon time. But make no mistake, the bill always arrives. However, the flexibility of delaying payment can be a really dangerous illusion. The very next month, feeling completely invincible, Daniel falls into a classic spending spree. We're talking a new phone, expensive shoes, a gaming console. He's swiping rapidly without tracking the total. And when the next statement arrives, the bill is massive. It's way more than he actually has in his checking account to cover. So here is the absolute crux of the issue. Unable to pay the full amount, Daniel decides to just make the minimum payment. You know, that tiny partial payment that keeps the account in good standing but leaves the vast majority of the balance unpaid. Ava warns him that this right here is exactly the trap. The bank isn't getting rich off the fact that he swiped the card. They're earning their real money because his balance is just sitting there, month after month, gathering incredibly expensive interest charges based on the card's terms. To really drive this point home, Ava uses a powerful metaphor. She tells Daniel, think of your credit card like a hammer. If you use a hammer correctly and precisely, it's an incredibly useful tool that can literally build a house. But if you swing it carelessly, it's going to cause some severe and expensive damage. A credit card is just a financial tool. It isn't inherently good or bad, and it is certainly not a financial plan. Its impact relies entirely on the person swinging the hammer. But these personal habits actually feed into a much larger, invisible system. Ava reveals another hidden mechanic behind that piece of plastic. Lenders use specific factors to calculate something called a credit score, which essentially assesses your credit worthiness. They look really closely at your payment history, like do you actually pay on time, and your debt levels. Are you maxing out your cards? This data is constantly being tracked and evaluated behind the scenes.
Suddenly, it clicks for Daniel. He has this major realization that every single time he makes an on-time payment, he isn't just settling a bill with the bank, he's actively building his financial reputation. A strong profile makes it significantly easier to qualify for loans, mortgages, or better borrowing terms down the line. Conversely, late payments can completely destroy that reputation, locking him out of those very same opportunities.
So how do the smartest users actually handle this tool? Well, Ava calls it the umbrella strategy. Think about it. You don't walk around with an umbrella open every single day when it's sunny out, right? You keep it folded up as a backup for when the heavy rain hits. Smart users treat credit cards the exact same way. They use them for emergencies, for the ease of travel reservations, for fraud protection on online purchases, and to safely collect rewards. They never, ever use them as an excuse to fund a lifestyle they cannot afford.
Fast forward a bit. 10 full years pass since that conversation, and Daniel has evolved drastically. From getting his first card and immediately falling into the minimum payment trap, he is now in a place of total financial mastery. He budgets meticulously, pays his statements in full and on time every single month, avoids unnecessary debt, and reaps the benefits of card rewards with absolute responsibility.
Looking back on his journey, Daniel reflects on a realization that perfectly sums up everything we've covered in this explainer today. He says, "I used to think a credit card made me richer. Now I know it simply gave me earlier access to money I still had to repay." He finally gets it. The plastic card was never magic. It was literally just a timing mechanism for his own hard-earned money.
And that brings us to the ultimate secret we've been uncovering. The mechanics are actually super simple when you break them down. Step 1, you make a purchase today. Step 2, you repay the issuer later. And Step 3, which is the most vital of all, you pay that full balance on time to avoid interest entirely. The smartest users do not spend more just because they have a credit limit. They use the tool for convenience and security, only spending exactly what they can afford to repay in full. So as we wrap up this deep dive into the hidden mechanics of credit, put yourself in Daniel's shoes. Take a look at the plastic in your own wallet. You now know exactly how the system works behind the scenes. The question you have to answer for yourself is this: will your credit card be the hammer that builds a strong, secure financial future, or will it be the careless swing that traps and destroys it? The choice and the tool are entirely in your hands.